Hi everyone, it's Robert Lewis here from Celtic Financial Planning. We're award-winning independent financial advisors based in Mold here in North Wales. We're really passionate about ethical investments, and today I just want to explore a couple of topics in relation to ethical investments and hopefully empower you to understand what they are and how they can work for you and your savings and investments into the future. For us as financial advisors, an investment is something where we save for a term of typically more than 5 years. Why do we do that? Well, if we've got a pot of money, and let's say we've got £10,000 and we keep that in the bank for the next 10 years, if interest rates are low, which they're very low at the moment, but inflation is still at 1.5%, then effectively our money is losing value every year. So if you have a long-term savings goal, you need to start looking at taking some investment risk to keep up with inflation, if not beat it, and to grow that pot of money, to grow that £10,000 over the long term. Typically, the way we do this as investors is looking at a pooled investment. So we would take our £10,000 along with hundreds of other people and give that to an investment manager. That investment manager would then buy shares, typically, in lots of different companies. The reason he buys shares in lots of different companies is to give you diversification. Diversification is hopefully going to reduce the risk of that portfolio losing all of its money. The reason for it? Well, if you're saving into 100 different companies, then hopefully, yes, a couple could go bust, but others will do really well and to grow your money over time. That's what investing is about, growing money from day one over the next 5, 10, 15, 20 years, however long your savings goal is. Typically, our longest savings goal would be our pension. So it's really crucial with our pension funds that we grow it into the future. So when we come to retire, that money has grown so we can still have the same purchasing power as we do today. There's lots of different forms of investment risk, from liquidity, which is getting access to the money when you want it to. There's capital risk. You could lose money if you put £10,000 in today. Tomorrow it could be worth £9,000, or ultimately you could lose all of your money. That's why it's really important to see an independent financial advisor to understand how much risk you should be taking with your capital, if you should be taking any risk at all. Investments involve risk, and as we've seen during the current COVID crisis, that risk can be extreme at times. So it's really crucial that you understand what levels of risk you're taking and why. You don't take risk if you're not getting a reward. Typically, that reward for investors is growing money. Ethical investments are investments made into companies that have a positive impact on the way that they interact with their environment, their community, and society as a general. So ethical investments can be really wide-ranging, and it's an individual matter. What one person considers ethical might be completely different to someone else. Someone might like renewable energy, another person might say, well, actually renewable energy for me has resulted in lots of wind farms being built around my home, so I don't consider that very ethical. So it's very, very personal, and it's really key to understand when you're looking at ethical portfolios what you're trying to achieve and what impact you're looking to reduce, or what positive impact you're looking to gain from that ethical portfolio. Ethical investments are not just about the traditional ethical sort of green planet areas. It can be in regards to science and technology. Ethical investments are really wide-ranging. Ethical investments are really personal. From one person to the next, they might deem one activity being ethical, another person might deem it not to be ethical. So it's really crucial to understand when a financial advisor is speaking to an investor that they explore what ethical means to that investor. Does it mean that you want to see renewable energy? Does it mean that you want to reduce the use of single-use plastic? All these factors are really important, and that's why, for me, an independent financial advisor is best placed to be able to do that, because they can look at the whole of the market, they can look at the whole investment universe and match your goals and objectives and your principles for investing with the right underlying investment fund. A restricted financial advisor does not have that capability to be able to go to every investment manager in the universe potentially to find you the right solution. And that's what we're talking about here, the right solution for your circumstances and your goals. ESG stands for environmental, social and governance. These are principles in which a company is positively having an impact on one or three of those areas. Hopefully those companies then will match your own principles when it comes to environmental issues, such as the planet, such as climate change, such as carbon emissions. Social, are they paying minimum wages? Are they helping to reduce poverty? Are they having a positive social impact on their local community? And then governance is about how a company is run. So do you want a director earning £7.5 million a year when the majority of the staff are on basic wage? That's the governance of a business. All those three areas are really important to understand when you're investing in a company. For me, it comes down to having a positive impact. There's lots of ways in which we can make money, potentially. We can invest, we can buy a property, we can save into a pension scheme. But where that money is underlying invested is really, really crucial. Ethical investments can help you make a massive positive impact to society. You could be helping to fund new research, new technology. A good example of this would be hydroponics. Hydroponics allows us to grow vegetables and fruit in controlled conditions, which actually can save hundreds and hundreds of litres of water per product. So by using this technology, we are helping ourselves as well as the environment. And importantly, ethical investments will help drive the future of our world economy for the benefit of our children, our grandchildren, and generations to come. For me, greenwashing is where an investment management company looks to basically sell more products by using an ethical label rather than actually believing in it. This is very common, and for me it really goes against what the whole principle of ethical investments is, which is buying into a business that's going to have a positive impact now and in the future. When it comes to ethical investments, typically we have two methods in order to analyse companies. The first one would be negative screening. What is negative screening? Well, basically that's where you would look to exclude companies from a portfolio based on set criteria. Now that set criteria could be any company that's involved in oil, any company that is involved in fossil fuels, any company that's involved in animal testing. They would be set criteria that you would negatively screen companies for, and if they did any of those activities, you would not include them in your portfolio. Positive screening is slightly different. That's looking to include companies that maybe meet criteria such as they use renewable energy, they have a policy to reduce their carbon emissions. So finding companies that adhere to those criteria, you would include them. That would be positive screening versus the negative screening where you're excluding them from the portfolio. There's a misconception with ethical investments that you have to have inferior investment returns because you're looking to invest in companies that have a positive impact. This isn't true. Just because a company has a positive impact on the environment, on its social governance, on its corporate governance, does not mean that it comes with inferior returns. Quite the opposite. A lot of the times these companies are forward thinking and they're thinking about the future impacts and how they can set their business up to counteract those impacts, and so they become more successful. A good example of this would be companies that have adopted technology during the current crisis to be able to enable their staff to work from home. They've come through the crisis, they're still there, they're still performing, and as such, as an investor, you can still get investment returns. Clearly, with investment returns, there's risk because you might not make money, you could lose money, but it's still an important factor that no, just because it's an ethical investment, you're going to make less money. That's not true. During the current COVID crisis, we've seen that ethical investments have been very resilient compared to their traditional peers. A big reason for this has been most ethical portfolios would exclude some of the big names in the oil industry. And as we've all seen, oil has took a real dive in its price at the moment, and those companies have suffered. So not just performance, but how resilient your portfolio is could actually be improved by holding ethical investments. So it's a key consideration. There's plenty of research out there that has shown that ethical portfolios have been more resilient than their traditional peers. So next steps as an investor, if you're interested in ethical investments or investing capital at all, the first stage would be to book a free, no obligation initial meeting. That's where essentially we get to understand what you need, your circumstances, what you already have and what your goals and objectives are. From there, we can then get more information via data collection if you've already got existing investments, which we can review. And then we can start to put a recommendation report together, which is basically a reasons why letter, why we'd recommend a certain course of action and what the underlying investment recommendation would be. Then you would have time to be able to review that and see if you're happy, and then we'd move on to an application process. But essentially, all those steps are clearly signposted and we give you ample time to understand what we're doing and why. Thanks for listening, everyone. As I say, I'm Robert Lewis from Celtic Financial Planning. I hope this video has been worthwhile. I hope you've learned some new points in regards to ethical investments, but clearly, if you have any follow-up questions or you'd like to know more, then please do get in touch. We do, as I mentioned, offer that free initial meeting where we can explore what you're looking to achieve and how we can possibly help. So thank you for listening. Goodbye.